All right, let's get ready for a deep dive today. You've sent us the SMFG 2024 annual report. We're going to try to break down their business segments, how they're doing financially, and what their plan is for creating value for their shareholders. It's a lot, but let's jump into it.
Yeah, and you know what's interesting right off the bat? SMFG, that's Sumitomo Mitsui Financial Group, they're really looking beyond just Japan. They want to be a global financial powerhouse. And with their new CEO, Toru Nakashima, it seems like that's exactly the direction they're going in.
It seems like one of their biggest priorities is this corporate and investment banking segment. They call it CIB. They're really pushing that, aren't they?
Oh, absolutely. Their global CIB segment, that's definitely an engine for growth for them. And their partnership with Jefferies in the U.S. shows that they're serious about the American market. They're going all in. I mean, it's the biggest financial market in the world, so it makes sense, right?
Yeah. But they're not just focused on the U.S., are they? They're also talking about this multi-franchise strategy in Asia.
Yeah, and that's where it gets really interesting. It's not just about, expanding into different countries. They want to create what they're calling second and third SMBC groups in these key Asian markets: India, Indonesia, Vietnam, the Philippines. So it's not just about having a presence there. They're trying to build mini versions of themselves in these markets.
So global expansion through CIB and this multi-franchise approach in Asia, but they haven't forgotten about Japan. They have the physical branches, the stores, and the new digital bank platform, Olive. It's like they're trying to cover all their bases.
It really is a smart approach to reaching the widest range of customers possible. You have people who still like going to the branch, having that personal interaction, and then you have the younger, more tech-savvy customers who want everything to be digital. So by offering both, they're really maximizing their potential customer base.
And it seems like that feeds into their strategy for wealth management. They talk about this trend in Japan of people shifting away from traditional savings and looking for other ways to grow their wealth.
It's a global trend, and they're definitely well-positioned to take advantage of it. This group-wide control power function they're building for wealth management, it's all about having a central point to coordinate their services across all their different businesses. It's about offering a more unified and comprehensive experience to their clients.
So that's their strategy. The next question is, are they actually delivering? I mean, their financial performance, they're reporting record profits for fiscal year 2023. Over 1.5 trillion yen. That's a big number.
It is. And you know what's important to remember is that it's not just because of luck. Sure, some things worked in their favor, like a weaker yen and good market conditions. But all of their business units are showing solid growth. It shows that their strategy is working.
So what were the main reasons for this jump in profit? Consolidated net business profit, which is basically their core earnings, is up almost 284 billion yen compared to the previous year. What drove that?
Well, their global CIB segment, definitely a star performer, driven by that U.S. expansion we talked about and some key partnerships. But their domestic retail business is doing well, too. I think that store and olive approach is proving successful. And their wealth management arm is benefiting from that shift from savings to investment that we mentioned. It's really a combination of good strategy and the right market conditions.
Okay, so they're doing well. And what about their capital position? They reported a CET1 ratio of 9.9%.
So the CET1 ratio, think of that like a measure of their financial strength, how well they can absorb losses. The higher the CET1 ratio, the better. And 9.9%, that's very good. It's well above the regulatory requirements. They're in a strong position.
And it's not like they're just sitting on that cash, are they? Their dividend per share is up to 330 yen. A pretty big increase. And then there's the share buyback program. 100 billion yen.
They're definitely rewarding their shareholders. And that dividend increase is the biggest they've ever had. It really shows they are confident in their future earnings. And the share buyback, that's basically a way to increase the value of their stock. So good news for investors all around.
It sounds like they're doing everything right. But I noticed they also talk a lot about create social value. That's a big part of their strategy too, right?
And this is something that sets SMFG apart. A lot of companies talk about social responsibility, but they're actually putting real resources behind it. 10 billion yen for expenses and 40 billion for investments in things like the environment, diversity and inclusion, even poverty reduction.
That's a big commitment. It's more than just lip service.
Definitely. And it's smart. Investors today are looking for companies that align with their values. So it's not just the right thing to do, it makes good business sense too.
So they're profitable, growing, they care about social impact. But let's be real, there have to be challenges somewhere, right?
Of course. The global economy is unpredictable. There's inflation, interest rates could rise, geopolitical risks. There are a lot of factors that could affect their performance.
So how do they plan to deal with all that uncertainty?
Well, one thing they're doing is focusing on what they call asset-light businesses. These are businesses that generate income from fees and commissions rather than lending money. So it's a lower risk strategy in a volatile environment.
Okay, what else are they doing?
Their overseas business, especially in Asia, is a major focus. The success of that multi-franchise strategy is going to be crucial for them. And they're also investing in digital innovation through that Olive platform we talked about. Basically, they're trying to stay ahead of the curve.
It all sounds very carefully planned, but there was one thing that really jumped out at me. They kept repeating this phrase, quality builds trust. What do they mean by that?
It's not just a slogan. They're really working on their governance, compliance, and internal culture. They want to build a sustainable business based on ethics and integrity. It's about the long term, not just quick profits.
They want to show they're here to stay. But speaking of long term, that multi-franchise strategy in Asia, that's a huge undertaking. Can they really pull it off? I mean, each of those markets is unique. Aren't there going to be some serious hurdles?
That's the big question, isn't it? To answer that, we really need to take a closer look at their multi-franchise strategy and see how it plays out in each market. So let's start with India. They're really doubling down on their presence there. They've made their non-banking subsidiary, SMFG India Credit, SMICC they call it, a wholly owned subsidiary.
Wow, so they have full control now. That's a big move. Why India? What's so special about that market?
Well, India's economy is recovering really well from the pandemic. They're expecting a lot of growth, and SMFG sees these non-banking financial institutions like SMICC as really important for supporting small and medium-sized businesses.
So they're not just focused on the big corporations, they're looking at the whole economy. Interesting.
Exactly. And SMICC has this really extensive network across India. They even reach into rural areas, so they can access a much wider customer base than traditional banks.
So they're covering all their bases. Smart. But India is not the only place they're focused on. What about Indonesia?
Indonesia. Different approach there. They increased their ownership in Bank BTPN to over 91%, making it a consolidated subsidiary. So they have a lot more control there.
So different strokes for different folks. What's their strategy with Bank ETPN?
They're focused on the mass market and microfinance, especially in rural areas. And they're moving into digital banking, too, which fits right in with SMFG's overall digital strategy.
So they're promoting financial inclusion while also keeping up with the technology? Nice.
Absolutely. It's a great way to tap into the growth potential of that market. And then there's Vietnam. They acquired a 15% stake in VP Bank, a commercial bank. That makes it an equity method affiliate.
So a smaller stake this time. What's the thinking there?
Well, VP Bank has a subsidiary called FE Credit, a consumer finance company. SMFG had already invested in that, but it's been struggling a bit because of the economic slowdown in Vietnam.
I see. So by investing in the parent company, they can have more influence and maybe help turn things around.
Exactly. It's a long-term strategy. They're betting on the Vietnamese consumer finance market eventually picking up again. And then finally, there's the Philippines.
Another key market in Southeast Asia. What's the plan there?
They've increased their ownership in Rizal Commercial Banking Corporation, RCBC, to 20%. It's a big player in the Philippines. They do both retail and wholesale banking.
So they're partnering with a strong local player to get a foothold in the market.
Right.
It's like they're systematically building their presence across all of Asia.
That's a great way to put it. And it's not just these 4 countries. They're also looking at other opportunities in Asia. And they've even set up a special fund, the Asia Rising Fund, to invest in startups in the region.
Wow, they're really serious about Asia. It's quite impressive.
It is. And it's not just about investing money. They're really encouraging collaboration between their different branches and these multi-franchise entities. They're trying to create this seamless network that can serve customers across borders.
So it's really a network effect, more than just the sum of its parts.
Yeah.
Okay, so that's their expansion strategy. Let's talk about shareholder value. They really seem to be focused on giving back to their investors, especially through dividends and share buybacks.
They are. Their dividend policy is very clear. They want to at least maintain, if not increase, dividends over time. And they've put their money where their mouth is. The dividend forecast for FY 2024 is 330 yen per share. That's a big increase from the previous year. It's the largest they've ever had.
It's a strong signal that they believe they can keep growing their earnings, and that's good news for investors. And then there's the buyback program,
Right.
100 billion yen, maybe even more.
Share buybacks are a classic way to boost shareholder value. So yeah, they're definitely taking care of their investors, but they're not stopping there. They're also planning to reduce their equity holdings by 200 billion yen over the next 3 years.
Now that's interesting. Why would they want to do that?
It's all about risk management. By reducing their equity holdings, they can reduce the risk of losses from market fluctuations. It's about creating a more stable financial base.
So it's a way to protect shareholder value in the long term. Makes sense.
Right. It's a balancing act. They're trying to maximize returns for their shareholders while also making sure the company is on solid ground. Speaking of solid ground, let's look at their financial performance in more detail. What's driving their profitability?
Yeah, let's dig into the numbers.
Okay, so a key metric for any bank is their net business profit. That's basically the profit they make from their core banking activities after deducting operating expenses.
So it's the bottom line, how much money they're actually making.
Exactly. And for FY 2023, SMFG's net business profit hit a record high, 1.5602 trillion yen. That's up 283.8 billion yen from the year before.
Wow, so where's all this profit coming from?
Well, their global CIB segment is a big contributor, of course. That push into the U.S. market is paying off. But their domestic retail business is doing very well, too. That store and olive strategy is working. They're reaching more customers than ever.
So they're not putting all their eggs in one basket? That's good.
And their wealth management business is also growing nicely. It's riding that wave of people moving away from savings and into investments. So they're firing on all cylinders.
It sounds like it.
Mm.
But let's look at some other metrics, too. What about their CET1 ratio? That's a measure of their financial strength, right?
Yes. And as we said earlier, it's very healthy, 9.9%, well above the regulatory minimums. It shows they have a strong capital buffer to deal with any unexpected problems.
That's reassuring. What other metrics should we be looking at?
Return on equity, ROE, is another important one. That tells you how efficiently they're using their shareholders' money to generate profits.
So the higher the ROE, the better. And how is SMFG doing?
They're doing well. Their ROE has been steadily increasing, which reflects their strong and consistent earnings growth.
So they're making money, and they're making it work for their shareholders.
Right. And to get a really deep understanding of their financial picture, we should look at their financial statements, their income statement, balance sheet, and cash flow statement.
Let's do it. What do those statements tell us?
Well, their income statement shows that their net interest income is growing. That's the difference between what they earn on loans and what they pay on deposits. It's their basic lending profit.
So they're managing their interest rate margins well.
Exactly. And their non-interest income, which comes from things like fees and commissions, is also going up. That means they're not just relying on traditional lending, they're diversifying their income streams.
Which is always a good idea. What about their balance sheet?
Their balance sheet shows that their loan portfolio is growing, which is a sign of a healthy business. But it's important to look at how they're managing credit risk.
Because more loans could mean more potential losses, right?
Exactly, but they seem to be doing a good job of managing that risk. They have a low level of non-performing loans, which suggests they're lending responsibly.
So they're not just chasing after growth at any cost. They're being careful.
Yes. And finally, their cash flow statement shows that their operating cash flow is very strong. That's the cash they generate from their core operations.
And cash is king, right?
Absolutely. Strong cash flow is essential for any business. It allows them to reinvest in growth, pay dividends, buy back shares, and just generally stay flexible. And SMFG also has healthy free cash flow, which is the cash left over after they've taken care of their essential capital expenditures.
So overall, they're in a very strong financial position. They're profitable. They have a solid balance sheet. And their cash flow's good.
They are. They're a well-managed and financially sound institution.
But what about the future? Where does SMFG go from here? They seem to be doing really well right now, but things change so fast, especially in finance.
Oh, absolutely. The financial industry is going through some major changes right now. Technology is evolving, customer expectations are shifting, and competition is getting tougher. SMFG needs to make the right moves to stay ahead of the game.
So what are the biggest challenges they're facing?
Well, the digital revolution is a big one. They have that Olive platform, but they need to make sure it's truly cutting edge. Fintech startups are popping up everywhere, and customers are demanding more personalized digital experiences. Traditional banks have to adapt, or they'll get left behind.
It's like they're in a race to keep up with the latest technology.
Exactly. And then there's their expansion in Asia. That multi-franchise strategy is ambitious, but it's not going to be easy. Every market has its own unique challenges. Regulations, cultural differences, strong local competition. It's a lot to handle.
It's a risky move, for sure. They'll need to be very careful and strategic.
And they can't lose sight of their commitment to social value. That's become a big part of their identity. It's not enough to just say it, they have to show it. They need to keep proving that they're serious about making a positive impact.
They have to show that they're not just in it for the money, that they actually care about doing the right thing.
Right. So the big question is, can they manage all of this? Can they navigate these challenges and become a truly global financial leader?
It's hard to say for sure, but looking at their track record, they have a lot of strengths. They're financially solid, they have a clear vision, and they're willing to adapt.
And they seem to understand that long-term success isn't just about profits. It's about building trust, creating value for everyone involved, and making a difference in the world.
Well, that's it for our deep dive into SMFG. We've covered a lot of ground today. Their business segments, their financial performance, their plans for the future. It's been fascinating.
It really has. And while there's no crystal ball to tell us what the future holds, I think it's safe to say that SMFG is a company to watch. They're a major player in the global financial landscape.
And they're not done yet. We started with a question. Can SMFG become a true global financial powerhouse? What do you think? We'd love to hear your thoughts. And until next time, keep diving deep.